Holy smokers, folks. Futures just opened. NASDAQ's down over 2% here. It looks like we got a lot more damage ahead. Bitcoin's tanking. Ethereum's tanking. Whole financial markets are tanking right now as we speak. And I got a lot to show you in this video here. Let's just get straight into it. All I ask in return is that you subscribe and hit the thumbs up button. That's it. Okay, I'm going to try to keep you guys up to date. The financial markets are a complete mess in 2022. I'm trying my best to keep you guys up to date in everything that's going on. And I got some words of wisdom toward the end of this video as well that I want to share with you guys, because there's definitely something I've seen that's consistently said out there, and I want to make sure everybody understands how to kind of get through a time period like this and how to most take advantage of it. So we'll call that financial education, okay? So first off, futures are tanking. I would say we're probably a 50-50. It's probably a coin flip if we go under 11,000 tomorrow. There's no doubt, based upon where futures are, and pre-markets will be trading, we'll likely go to a new multi-year low on NASDAQ, essentially. And high probability, I would say, as of right now, at least, that we're down well over 30% year to date by the end of tomorrow. I went on the Hungry Bull app, the greatest app ever in creation of mankind. And what do I see when I open that up? Ethereum's now down under 1,400. Bitcoin now at this time is under 27. It's now into the 26s. Crypto is just tanking through the floor right now. Bitcoin and Ethereum obviously are the ones that most people care about, because that's what almost everybody has their money in if you're into crypto, right? Some people play in different cryptos outside of Bitcoin and Ethereum, but those are the two big ones, right? Now, I want to show you something that's going to kind of blow your mind in regards to Bitcoin and Ethereum, okay? So first thing I want to say is I think Bitcoin, in order to really feel the full devastation, I think we got to go under 20,000 on Bitcoin. And I know there's a lot more pain ahead, but I feel like in this sort of financial market, I feel like you have to have just folks feel devastated. I think once you get under 20,000, that feels pretty darn devastating, essentially. A lot of people loaded up in past years at Bitcoin between 5,000 and like 15,000. And so I think if you start pushing to levels that are not just under where these folks all bought at, but pushing pricing, like getting close to prices where even ones that have quote unquote made a lot of money from Bitcoin, even when those folks start to get hit, I think that's the moment in time that you call real capitulation in Bitcoin and in the crypto market in general. But until that, it gets a little painful. Now, in terms of Ethereum, where do I think Ethereum has to fall to? Well, I think Ethereum, we got to get to $800 to $1,000 on Ethereum. I think in this sort of financial market, you've got to have folks feel devastated, unfortunately. And I think if you get down to that 800 to a 1K level, I think folks start to feel devastated. It's already been a vicious fall. Now, something I think is interesting here with Ethereum and Bitcoin that not a lot of people ever pay attention to or ever talk about, and I think this is relevant, okay? Ethereum is down 63% year to date, right? Awful. That's awful. 63%. Bitcoin's down 42% year to date. Awful. That's horrible. Horrible year to dates. But you know what's crazy about that? It could be so much worse, okay? Look at this. Netflix stock, one of the most popular stocks in the stock market, one of the, crown jewels of the stock market. Let's just call it that. Netflix stock is down way more than both of those. Netflix stock is down 69% year to date. It's crazy that Bitcoin and Ethereum are holding up better than Netflix stock. That's just like, that blows my mind, right? Shopify, one of the, the darlings of the stock market for the last number of years. Shopify stock is down 74%. So Shopify is far underperforming Bitcoin and Ethereum. I just think that's interesting, given the market we're in, that Bitcoin, like who would have ever thought Bitcoin and Ethereum would be holding better than some of these other stocks out there? Like to me, that absolutely blows my mind. Okay. Now, before we get into the rest of this video, which I got a lot to show you guys here, that's, you should perk your ears up. But before we get into all that, FTX US, I got to shout out them. They are the official crypto partner of the channel, and they just actually got into stocks recently as well. They changed the game when it comes to stocks. They have fees that are among the cheapest out of just about everybody out there. They're trusted by millions of users. And also you can dollar cost average. So let's say, each week you want to buy $20 of Bitcoin or something like that. You can set up your account. So essentially it automatically buys without you ever having to worry about like the pricing and things like that, right? And also, Every trade of crypto over $10, you get free crypto as well. And right now they're giving up to $100 in free crypto when you set up an account with my pinned comment down there and use my referral code Holy Smokas. And I could tell you, you if you're gonna get crypto, you want to get it usually when it's lower, and especially if you're going to get some bonus crypto out there and things like that. It's better to get it when the market's crashing rather than when everything's sky high. Let's put it that way, and that's something we do know throughout the time. So make sure you take advantage of the pinned comment down there and get that deal while they still have it. I don't know how much longer they'll have it for, but they have it right now. And once again, don't forget to use referral code Holy Smokas. Okay, now gasoline price. Just grabbed a screenshot of this. We're just reached another all-time high. Another all-time high. We are now over, on an average in the United States of America, we are over $5 a gallon now for regular. That's insane. Diesel, we're now $5.77. Average. That's average. Like, in some of the biggest cities out there, which is where most people live, you're way above those averages in some of the biggest cities out there. So, it's even more devastating for a lot of folks than these numbers show, essentially. I heard about some stations in LA pushing like 7+ now for regular. Like, come on, man. A year ago, for reference, we were at $3 for regular, and a year ago reference for diesel, we were at $3.21, okay? So nonetheless, guys, this is horrible for the economy. I mean, absolutely devastating. In terms of transportation of product, it's horrible. In terms of consumers, it's horrible. At the end of the day, most folks don't have EVs yet. That's just bottom line. Like, the far majority of cars you're going to see on the road are not electric vehicles. So if you have an electric vehicle, it's not much of a concern. But the problem is, like, 95% plus of cars out on the road right now are not EVs. They're gas cars that have to go fill up at the station and pay $5-something a gallon. And that's just devastating. Like, for the middle class, that's devastating. And for folks that are under the middle class, that's devastating as well. Because that's one of those situations. There's nothing good that comes out of that. The only ones that benefit are folks that may be playing oil price and maybe like some oil and gas companies. But outside of that, it does good for nobody. It doesn't do good for the restaurants. It doesn't do good for retail. It doesn't do good for companies that have to send products around, the United States. It doesn't do good for anybody, guys. It's absolutely devastating. And the problem is, it's not just a United States problem. It's a global problem. It's a global problem. I just got back from Arizona, and with the Model X, for instance, when we bought that, we get free supercharging for life with that vehicle, right? And I was doing the math on how much that saved us driving out to Arizona and driving back. I would estimate, because if we didn't have that, we'd have some big SUV. I don't know, maybe like a Suburban or Tahoe or Escalade or something like that, or a Range Rover, right? That saved us at least $250 to $350 in gas just in that one trip. So that's like a huge, huge advantage that unfortunately, most folks do not have that advantage. And so at the end of the day, like, I was speaking to a friend, it now costs him almost $200, he was telling me, to fill up his truck. Almost $200. Like, $200, like, I thought that was like the price like people had to pay for like semis. He's just got a truck, man. A Ford truck. I'm like, you got to be kidding me. That's just ridiculous. Like, $200 now to fill up. Let me know how much it costs you guys to fill up at the station. Like, that's just insane to me, like the pricing, and it's devastating for the economy, okay? This is frustrating to me. This is really frustrating to me. So what we're looking at here is how much margin debt's still out there. Now, this was as of April, but unfortunately, these numbers lag 1 to 2 months. So a lot of times you don't see it till 30 to 45 days in the future. The good news is the amount of money on margins continuing to come down. But I'm like, I don't feel comfortable until we're into the 500 to 600 range for margin. I think that's where we should likely be at. And the fact that we're still in the 700s is, I don't think a good look for the market. I think we got to, unfortunately, have even more devastation in this market, man. What the heck is crawling on me down here, man? Scorpion, a spider, what's going on down here? But anyways, margin, we got to get that number down. Rice, you got to be kidding me? You flipped my flapjacks? When the heck did rice become an issue? No, all of a sudden we got a shortage of rice? Come on, man. Gosh, like, someday as humans, we're going to have it together. We're going to get it together again, okay? Might not be today. Someday we're going to have our stuff together again. Holy smokes, okay? Now, this is what I'm showing you here is very, very important for everybody watching this video, okay? What this shows you essentially is how much the market is off of all-time highs. Now, this was as of Friday's close. Remember, the market's likely going down more tomorrow as it looks. Because everybody's processing the data that came through on Friday and like, oh crap, they're selling off, right? And so basically the situation is and was down 29.3% on QQQ. We could definitely approach new 2022 lows. We'll see what happens. A lot of people are looking at this week as being a potential capitulation week. We'll see if that happens. But with that CPI, I wouldn't be surprised if we see some capitulation with Bitcoin, Ethereum tanking, the crypto markets just, diving through the floor. I wouldn't be surprised if this is more of a capitulation type week. I wouldn't be surprised if VIX picks up this week, which is volatility index. I wouldn't be surprised at any of that, to be quite honest. And so, is this a week that you could potentially see new 2022 lows for the Dow, S&P, and the NASDAQ? Absolutely. And, it's honestly kind of needed. And especially, these guys got to play catch up. I don't feel comfortable, honestly, with the market, in terms of like feeling optimistic about the short term of the market. I don't feel comfortable until those babies, they got to get within range of this. They got to get within 5 percentage points of this NASDAQ, okay? Problem is NASDAQ tomorrow is going to be down 30+% likely, right? Off all-time highs. That means the SPY and Dow have a long way to go to catch up. Because what you notice in almost every single crash we've ever gone through, the Dow and the S&P are usually within about 5 percentage points of the NASDAQ. We're so far off of that. We're 11 percentage points difference here. We're like 15 percentage points different there almost. So these babies got a lot further to drop, man. That means big tech, big dogs have to fall more. That means oil and gas has to fall. That means the entire market has to fall more to get more in line there. Tick, 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 tick. It's ticking on oil, okay? It's ticking on oil. We're in the summertime right now, which is usually good for oil prices, but this is a ticking time bomb, man. And I went through slides in the video I released earlier today. Make sure you watch that one, showing back at history and how oil always goes on this like bull run essentially, right as we're entering a weakening economy, which once again, what is happening? We have a weakening economy, weakening earnings for companies. Meanwhile, simultaneously, oil prices gone parabolic. This is a tick, tick, tick situation, okay? And it's just a matter of time before that baby tanks. I don't know if we got a few more days, few more weeks, or maybe a couple more months left of these, oil going insane. But I promise you that will come to an end. Now, oil bulls will, some of them will be honest and be like, yeah, eventually this show is coming to a close and it's going to be sooner rather than later. But a few might try to tell you things like, oh no, this time's different, man. It's going to stay high. No, it's not, they say that every single time. And every single time is wrong. Like this, just like stocks, crypto, real estate, everything else has to come down. And this will come down. And it will be a sharp fall when things start to really deteriorate in the oil markets, which will be a good thing for gas prices. But unfortunately, the problem with this is, and this is a major problem, and I want to share this with everybody, even when oil starts to go down, it's going to take a bit for gas prices to start falling, okay? There's like a lag in there, unfortunately. It's just the way that it works, okay? So essentially what this means is, let's imagine a scenario where oil peaks at the end of this month, okay? And it starts going down in July in terms of oil price. In terms of you starting to see any major difference at gas stations, it could be 2, 3, 4, 5 months still before you start to see any real relief at the pump. So that's the main issue, that even if oil price peaks sometime soon, you're still going to have a while to go before you start to actually feel like the effects and be like, oh, thank goodness oil prices finally, gas prices finally going down at the station, okay? So that is very important to understand there. Now, you guys have probably heard this expression a million times, and even newer investors, you sometimes hear this expression, be fearful when others are greedy and greedy when others are fearful, okay? Now, let's be very, very clear. We're in an extremely fearful market right now. Extremely fearful. You have to be greedy in these sorts of markets in 22. And the bears will tell you, no, don't be greedy right now. No, you have to be greedy in these sorts of markets. You have to be greedy in these sorts of markets. If you are not greedy in these sorts of markets, you always look back with regret. And the issue is, in every single situation where you have the NASDAQ go down 30, 40, 50%, every single one of those, there's so much to be fearful of. In the great financial crisis, we thought we were losing the whole banking system. Literally, that was the thought. We were going to lose the whole banking system. Like the whole thing was going to collapse. JP Morgan, Bank of America, Wells Fargo, the whole thing was done. Wall Street was done. Everything was done. That was a thought process at one point, right? And then it was like, oh my gosh, if we bail all these out, we're now, a socialistic society, which ruins the United States of America as well. So both sides, there was tons of fear. And ultimately, at the end of the day, what should you have been doing? Buying, despite all that fear. The Rona crash, right? Oh my gosh, we might have to close the economy for several years. All that fear, all that, ultimately, what you should have been doing is buying, obviously, right? And you look back at every single crash where the NASDAQ went down 30, 40, 50%, every single one of those, there was so much to be fearful of. There was so much to be scared of. But ultimately, it was the time to be greedy. Okay, there's no such thing as be greedy when the market's fearful without the market being in mass fear, and for good darn reason. Okay, there's no like in between there where it's like, oh, everything's good, but we need to be greedy right now. No, when we're talking about that, when Buffett uses that expression, he's talking about the NASDAQ, the S&P, all those markets being down 20, 30, 40, 50%. That's what he's talking about when he's talking about being greedy in that sort of market. This sort of market where only 20% of investors are bullish on the market over the next 6 months, that's a market that has extreme fear, and you have to be greedy in that market. That's what Buffett meant. Not, oh, the market's off 5% from all-time highs. You got to be greedy, okay? So it's very, very important for everybody to understand. This is the sort of market when you see name brand companies down 40, 50, 60, 70, 80%, and it could get worse for some of these even big dogs that have been holding up well. That's the market to be greedy in, okay? That's a market you have to take full advantage, and you don't let your foot off the gas. You keep going until you own the whole freaking company, man. Until you own every dang share in sight, you keep going and you keep going and you keep going. This is a real market. This is a real market where you need to be greedy when others are fearful. This is what Buffett meant. These sorts of markets where they're talking about it's the end of the United States, it's the end of the economy. That's when you need to be full go, okay? Now, some people say to me, oh man, I would love to keep buying, but I'm out of ammo, bro. How do I reload, okay? How do I reload? All right, man. Listen, here's the deal. Financial education coming at you, okay? There are certain years when you need to postpone everything else in life, okay? And you need to go hard. I can tell you 2009 was one of those years for me. I worked 3 part-time jobs, plus taking like 15 credit hours in college, plus running track for my college, okay? And I went hard because stocks were extremely cheap and I was trying to make money and try to get my investing account started, okay? 2010 through 2013, I went hard in the workforce. You know why? Because stocks were still insanely low and I needed to take advantage of that. So at Quick Trip, man, not only was I worried about trying to get promoted, but you know what else I was trying to do? If somebody called off a shift, I'd pick up like overtime shifts because I made time and a half on that. And it's like an extra 9 to 10 hours I would make there, which, back then, based upon what I was making, would be like an extra $250, maybe $300 for working that extra shift, essentially, okay? Which was well worth my time back then. If I think back to 2020, definitely was a year I worked very hard, because obviously stocks were extremely discounted. I wanted to take advantage of those deals in the market, right? So I had 2 YouTube channels. I had this channel going in financial education too back then. 2017 year, I went really hard, right? Not just because I felt like stocks were a good deal, but because I had my real estate marketing company and I had YouTube going all at the same time. There's certain years that you work harder than other years. There's certain years that are the years where you can chill back a bit, watch the Netflix, watch a lot of sports, hang out, chill out, go just mess around online. I don't know, watch Keeping Up with the Kardashians and watch your Netflix and all that stuff. There's certain years that are more leisure years and go on trips and go on vacations, stuff like that. There's certain years that are more leisure years, and there are certain years that it's like, dude, I'm grinding it out for the next 12 to 18 months. I'm going to freaking get a second job. I'm going to get 10 jobs if I got to get 10 jobs. I'm going to work 98 hours a week. I'll work every moment if I got to work because I'm buying this dip full go. This is one of those time periods we're going through where you need to do that, and you have to step up or you will always look back and you will always regret it. And there are certain years that you can chill back, man. Like 2021 was actually a pretty chill year for me. That was more of a leisure year. This year is not that leisure year. I'm grinding this year, man. And, there was one year through halfway through 2014 and through all of 2015, I took a year and a half off. I didn't do any work for a year and a half. You know why? Because I felt like, hey, this is kind of a more leisure time, and it was. And there's certain time periods in life when you got to grind it out. You got to put in some insane hours to get your money up and to buy the dip full go. This is one of those time periods. And so I don't care if you got an Uber driver, whatever you got to do, get a second job, third job, right now there's still actually jobs available. What happens if in 12 months from now, 6 months from now, those jobs aren't available? Then you'll be looking back and wish you had other ins at other companies. Remember that. You never know if a company could fire you, right? Let's say you got a job somewhere. What if this place cuts your hours? What if this place fires you? If you got already an in at another place, you're not as fear driven, right? Because you have other options at your disposal. If you're all in one place, your place better pay you bank and your job better be super safe. But even if you got that, still make some money on the side. This is not the next 6 to 18 months is I'm going to grind it out and I'm going to buy the dip as heavy as I freaking possibly can. And by the end of this thing, I'm going to own the whole dang world, okay? Chase your next zero. I'm chasing right now. I'm buying the dip because I'm going to 10 million to 20 million in stocks over this next 36 months. 10 million to 20 million in stocks alone over this next 36 months. I'm not there right now, but I will go there over the next 36 months. So I'm buying the dip full go because I am very confident in the companies I'm buying and where those stock prices will be over the next 3 to 5 years. And this is your time to chase your next zero, whether that's going to $100,000 or whether that's going to $1 million or whether that's going to $10 million in stocks. This is that time to chase that, and you don't let these opportunities pass you by. You be greedy when others are fearful, and we're in a very fear-driven market, and we will continue to be in this fear-driven market for a bit here. And so you got this time period in front of you where you're going to be able to take advantage, and you need to take advantage of that. And whatever that means, get your income up. Focus on that income, make as much money as possible, plug that baby into stocks, and don't freaking stop until you drop. Much love as always, guys. Have a great day. Hope you appreciated this. I appreciate you joining me. Don't forget to check out FTX US. That is pinned comment down there. Sign up for them. Use referral code HolySmokers, and have a great day.